Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Today we're going to talk about just looking more into the macro environment. I know a lot of people, or some people, are concerned about what's happening in the stock market, and even with Bitcoin being down from its all-time highs, currently at around $83,276. So we'll get into that a little bit more. Let's go ahead and go through the crypto market update as usual. You can see Bitcoin is currently trading at that $83,000 range. It's up almost 2% over the past week. Ethereum still below $2,000, currently trading at $1,900. It's down 7% over the past 7 days. XRP is up 7%, and it's currently trading at $2.34. Solana at $128. It's basically flat over the past week. We see BNB is up 10% over the past 7 days. They got a recent influx of investment coming from an Abu Dhabi sovereign wealth fund. They are investing $2 billion into Binance, which is one of the largest cryptocurrency exchanges in the world, and they will be getting a stake of Binance as well. So they're getting an influx of cash. So that just goes to show that it's another reason why people are really excited and still interested in the cryptocurrency market despite the recent downtrend. You can see that sovereign wealth funds, as well as nations. You see the United States announce that they will have their strategic Bitcoin reserve. They will not be selling the Bitcoin that they currently have on reserves, and there's a possibility, been a bill that's been introduced that they will potentially buy more Bitcoin to add to that reserve. So there's still demand that's definitely incoming into Bitcoin as well as cryptocurrency. So we'll obviously keep you posted on that, but that's one of the reasons why BNB was up over 10% over the past week. We see Dogecoin, the largest meme coin of them all, is trading at around 17 cents. So it's basically flat over the last 7 days, still under that 20-cent mark. Hasn't been able to get back over that over the last couple of weeks. And then you see Cardano and Tron rounding out the top 10. So if we look here and we want to make sure that we have a general understanding of what's going on from the macroeconomic environment. It's always important because it does play a role in how different assets trade on the open market. So as you can see here, the total outstanding credit card balances, this is in the United States from 1999 to present day. You can see going all the way to, let's see, from 1999 to basically the last quarter of 2024, it has reached the highest heights it has ever been in terms of the amount of credit card debt. So that basically is an indicator showing that there are a lot of Americans who are hurting right now and are using their credit cards to pay for different items that they need in their life. Now, of course, are there some people who are using credit cards not necessarily out of necessity, but out of want? But even still, that shows that they don't necessarily have the money to exactly pay, I should say, for certain items, and they're using the credit card to pay for items that they feel that they need or want at this particular time, and they hopefully will be able to pay back that debt later. But this just goes to show that people are using credit cards, and it's actually some of the worst debt to take out because the interest rates are so extremely high on credit cards. You can see credit card interest rates as high as 20+%. So basically, if you're putting in $1, you're going to owe $1.20 whenever you're paying back that amount of money. That's a lot of money. So when you think about $1,000, $10,000 and up, it really adds up, and that can sometimes snowball into going into worse debt. So we never would recommend somebody getting into credit card debt, particularly if they don't know what they're doing and if they're not unable to pay the credit card balance at the end of each month. And as you can see here, if we look at the total debt balance when it comes to not just credit cards, but housing debt as well. So a lot of people, to buy homes, have to take out loans, have to take out mortgages to be able to pay for their home. And you can see here that that is also continuing on the rise, and it's the highest that it's ever been. That also goes to show that the amount of money that it costs to pay for a house is going up. So that also shows in the amount of debt that is going up as well, because people are having to take out more money to be able to pay and take out a mortgage for their home. And you can also see this non-housing debt added on top of that. And so you can see we have upwards of $18 trillion of debt that is coming from American households. That is not great. we can see here that when we look at the S&P 500, one of the reasons why it has gone down over the past several weeks, because we are currently in the middle of what people are considering is a trade or tariff war, where the United States has been threatening other countries around the world to be putting an extra tax on their items that would be shipped into the United States. So it would make anything from oil to liquor to lumber to all different types of items that are being traded back and forth from various countries, as we use resources from various countries and they use resources from us. The back and forth is causing a lot of uncertainty. People don't like uncertainty, particularly on Wall Street. And so we're seeing that people are starting to take their money away from more riskier assets, and stocks are still considered a risky asset. And so people are taking their money and putting it into checking account, savings account, CDs, bonds, things of that nature. So it's going to show that people are going so-called risk off. Now, could this just be a blip? It potentially could be. Could we have a little bit more downside? That's a possibility as well. But usually when we have these dips, we always recover. Obviously, the last major dip that we had was in 2020. And you can see we had what they call a V-shaped recovery. And within the same year, we went back to all-time highs and continued to go on a crazy run towards the end of 2021. Then we had another dip in 2022, and then you see we slowly started to come back up in 2023 and 2024, and you see we made all-time highs and continue to make all-time highs all throughout 2024 and into 2025. So we're going to continue to go on this trajectory. When you continue to look back at the S&P for years and years and years, going back a couple decades, you can see that the S&P 500, no matter what, is going to continue to go up. That's why people say that it's one of the best investments that you can ever make. Some people believe that United States should have been investing retirement funds and pension funds into the S&P 500 as opposed to bonds, because the S&P 500 over a period of time has a much better return than bonds, which are definitely very safe when it comes to getting your yield of about 4 to 5% every year. But when you look at the S&P 500, yes, there may be a down year or two, but when you look at it over a larger time frame, you see that the S&P 500 continues to go up and to the right and continues to have great returns over the long run. Now, when we look at Bitcoin, which is obviously the next level up in terms of risk on asset, it's one of the riskiest assets that are out there right now. And so you definitely want to make sure that you do your research and continue to do due diligence, because it's not something that you can learn overnight. It takes time. As a hard asset, one that is a finite asset that is secured by a decentralized network on the internet, it is different than gold. It is considered digital gold, and it has many advantages over gold, one of them being it's easily transferable. Obviously, when you're dealing with physical gold, you have gold bars or nuggets, and it's hard to transfer. If I wanted to send that so-called value of gold to someone, put it in a package, try to ship it somewhere, there's going to be extra shipping costs. It's going to be very difficult, depending on how much gold I have, to be able to transfer that gold from me to someone else. When it comes to Bitcoin, all you need is an internet connection in your phone or your computer, and I can easily transfer that Bitcoin to someone within an hour or less, depending on the network congestion on the Bitcoin blockchain. So another thing is that gold is not finite. Now, there's still gold that can be dug up. It obviously takes some time, but when you look at it compared to Bitcoin, there's only going to be 21 million. Not even every millionaire in the entire world will be able to get one Bitcoin, particularly if those who have been holding up to this point continue to hold and do not sell, as we see that demand is still coming in to Bitcoin. Another thing that we look at is the M2 supply. We've talked about this a few times before in some of our past videos, but this is another indication of where are people putting their money. If people are feeling good, if there's not a lot of inflation, where people feel comfortable with being able to pay their bills and they have some extra money to invest, then they will look into that. But if they are concerned about prices being too high or them being unable to pay for different lifestyle choices and lifestyle items that they need to be able to make it through each day and each week and each month and year, then they're going to put their money in more safer assets, like just holding it in a savings account or in their checking account, or maybe putting it in a certificate of deposit account. So when you look here at M2, we see that M2 is a measure of the money supply that includes cash, checking deposits, and other deposits readily convertible to cash, such as CDs. So it's basically money that's easily available. When M2 is like basically cash, money that is right there, it's liquid, you can have it. M2 includes other deposits, but are also pretty easy to get to, which include CDs. So you can see that the weekly M2 and M1 numbers are closely monitored as indicators of the overall money supplies, meaning the money, all the money that is out there and in the economy. And so you see that too fast growth in the numbers can be a warning sign of inflation. So basically that's showing that if a lot of people are holding on to cash, if a lot of people have their money into their checking accounts and their savings accounts and CDs, it's showing that they're not putting their money out into the stock market or into cryptocurrency or gold or some of the other speculative assets that are out there. They want to make sure that they are as liquid as possible. And so that means that there's a possibility that things are too much. The cost of being able to live is too much. And so they're trying to hold on to as much money as they can because they don't have the money to be able to speculate because of the higher prices of things. So that's another thing that the U.S. Reserve looks at when determining whether or not they will be cutting interest rates. We want to look at some of the other indicators and factors that come into these type of decisions. So when you see here, it's kind of cut off a little bit by the screen, so I apologize, but basically it's showing that the different asset classes and the total return since 2011. And you can see here that Bitcoin way outperforms everything on the grid since 2011. As we know, Bitcoin was conceived in 2008, and its first transaction was in 2009, January of 2009. And so we can see here now 16 years later that Bitcoin has done incredibly well. And even if you look at it, we always talk about the 4-year cycle. So basically you have 3 years of an uptrend, then you have one down year. And now these down years, you can see 58% in 2014, 73% in 2018, you see 65% in 2022. So there's major dips, but when you look at it cumulatively over time, if you buy Bitcoin and hold it, just buy it and hold it, you have outperformed. You have outperformed the S&P 500. You have outperformed gold. You have outperformed U.S. small caps. You have outperformed the NASDAQ. When you look at, and the NASDAQ, I mean, incredibly well over the last 14, 15 years. These returns are amazing for some of these assets. Really, the only one that's been down over this time span is the commodities. Even still, when you look at Bitcoin compared to all these other major asset classes, there's no comparison. There really isn't. So it's definitely something to think about. We wanted to just go over just kind of the overall basics when it comes to some of the things that you have to look at when it comes to what's happening in the market. You want to see what's happening with the S&P 500. You want to see what's happening with gold. You want to obviously see what's happening with Bitcoin if that's something that you're very interested in, which is something we are very interested in. So we're trying to give you as much information as possible. So make sure to check us out, not only on X, but as well as IG. We post there nearly every day. We thank you so much for checking in with us here on YouTube. Every week, we're here for you. Let us know if you have any questions. And if you have any constructive feedback, we're always appreciative of that. In the meantime, we look forward to linking up with you soon on the network chain. Take care.